Well, taking a look at the market performance, the market seeing another down day yesterday. What sense are you making of market activity at the moment?
Well, hello, Alishia. Thanks for having me. Yeah, the market has actually been rather flat for the last few days and weeks as well. And I think what's the sense in the market is still caution. Most investors are still very cautious. As in, the reality is that there's still no near-term catalyst at the moment. And so investors are more or less trying to pick stocks at a bargain and not necessarily following the market and trying to bid up prices, because there's that reality that there's still no immediate catalyst right now that will trigger an upturn. So most investors are still quite cautious.
Well, the CBN has released guidelines, at least, for granting liquid asset status to state government bonds. I mean, this is 3 months after it decided to confer liquid asset status on eligible state government bonds. What have you made of that news, and how are you reading that development?
In my view, I think it's actually a very positive, it's a welcome development. In the past, what we saw happening was that state governments would actually go individually to the CBN to try and get that status. But with this new guideline, states that want their bonds to have such status would make sure that they meet the guidelines and bring such bonds to the market. And I think for banks, in my view, I think it actually creates more revenue in the sense that banks, they are more tradable. The reality is that in the past, banks were quite wary with lending to state governments, but I think this has actually created a safe avenue to lend to state governments, and I think it also will help banks as well to exit at any point in time. If you realize that there's actually an exit position, there's no caution per se. You are more at rest with lending to such public institutions. I think another fact that there's actually a guarantee also from the government in the sense that funds allocations to such states would also be used to fund payments for such bonds, will also transfer payment risk from the state governments to the federal government, and I think it's actually a very welcome development.
So a welcome development on that front. In the meantime, when you look at some of the foreign perspectives we have on the banking industry, we had Standard & Poor's, the rating agency, come out saying that the Central Bank of Nigeria may need to guarantee actually the acquisition of rescued banks to be able to win full confidence of investors moving forward. What's your view on that, and is there a different sentiment that foreign investors hold compared to those based locally?
Alishia, there's actually no difference in the sense that even the market operators right now and the market as a whole has realized that there actually should be an incentive to acquire any of the banks right now, because the reality is that the assets are it's still not clear what you're buying as well. And so in a way, you'd actually need to get an incentive from the CBN to acquire such an asset. And so I don't think the CBN is actually not aware of that as well. The CBN is aware that there obviously will be incentives as well. And I think that's why they're trying to push out the AMCON, the AMC out as soon as possible so that they can actually start doing transactions. And I think that would also, because the fact is that it has to be a case-by-case basis. So, because it has to be a case-by-case basis, really. So you have to have at least the AMC out first, and then when transactions come in, you know what incentives to give any investor that wants to acquire.
Well, we know, Muyiwa, that you focus primarily on the banking sector. So let's take a look at some of the stock picks that you have within this space. We have Guaranty Bank on your list, and it was one of the outperformers in yesterday's session, managing to buck the overall trend. Muyiwa, can you hear me over on that end?
Okay, I can hear you now. I couldn't hear you before.
Let's take a look at Guaranty Bank, because we know that it is one of the players that sits on your stock pick list within the banking sector. It was one of the stocks that outperformed yesterday, bucking the overall negative trend. Your view on that, Counter?
Yeah, on a trading perspective, Guaranty Bank is still attractive. On a PE basis, for example, it's trading at a PE of 9 times, and that's still at a discount when you compare it to the overall market PE of 12 times. That's for the banking sector. And I think apart from that, even though on a price-to-book basis it's trading at a premium, but I think it's understandable that that would happen because the bank, compared to most banks, in 2009, Guaranty Trust Bank was still able to make a very strong profit. They were able to pay strong dividends as well. And I think investors are aware that they would obviously still get returns from the bank compared to a couple of other banks. In terms of quality assets, their asset quality is still quite strong, even though NPLs was much higher than it was in the past. But I think the reality is that compared to most banks in that sector, it's still a very rather safe bank. And I think in terms of credit growth as well, we believe that it is in a position to grow its asset higher than other banks in the sector because there are weak banks right now that have quality assets that it's easy for GT Bank to take up and create
certainly an
more
interesting
income
playing field that lies ahead.